I have to be honest, SOFI has given us a wild ride so far this year. Now, some loaded up in the $4 and $5 range on this stock, but many people did not and are holding a big bag of SOFI shares at a much higher price than the price is today. And yet there are many of you out there looking to build out a position and wondering what is the right way to buy so I can completely avoid being a bag holder too. Well, I'll tell you the right way to buy SOFI stock that hurts so many people when they're trying to build out a position. And you can apply this to any stock on the stock market. So even if you're not interested in SOFI, you can absolutely apply this to any other stock that you're looking to build out a position in. And I'll tell you exactly whether or not I think SOFI is in trouble and whether I'm buying more SOFI or not. So let's talk about that. But first, I got to thank all you guys out there that hit the like button early. That's awesome. Obviously, please like the video if you like getting the truth without the hype. But those of you guys that hit it every time for the videos early on, that helps out the channel immensely. So thank you very, very much. And please do it for all the creators that you like. It absolutely helps all of us in regards to telling YouTube, hey, we like this guy, good creator. So thank you very much. So I'm actually going to give you two different ways to buy SOFI stock here. So you kind of have two different ways of doing it. And of course, you can take this and modify it. And that's actually what I suggest. Take it and modify it to your situation and what fits best for yourself. So this right here will kind of give you two different baselines to work from and then kind of make your decision from there. So first up is a simple DCA. Dollar cost averaging. It is the place all beginners should start until you start getting a much deeper understanding of stock market and everything else. And honestly, you never even have to move away from a simple DCA if you don't want to. It is really, really hard to beat. Now, statistically, you can create scenarios to where you can beat it a little bit. You can beat a DCA, and we'll talk about that here in just a second, exactly how to do that. But in general, it is incredibly hard to beat just DCAing into a stock. Now, for those of you guys who don't know, it's dollar cost averaging. And for me, I'm just going to explain it simply. I'm sure there's some other technical definition out there. I'm sorry. I'm not going to give that to you guys just quite simply. It is just buying a stock on a schedule. Basically, hey, every time I get paid, I'm going to take $200 on my paycheck and I'm going to buy, these three stocks with that particular paycheck. Something like that. You put it on a schedule, you just dollar cost average it. That way you're buying it when it's high, when it's low, when it's just medium, everything in between. You're just basically buying the stock on a schedule, weekly, monthly, every time you get paid, whatever you choose to do. There is no right or wrong way to execute a DCA. I guess the only thing you can do is deviate from your DCA. That's probably how you screw it up. Otherwise, you just simply buy on the schedule and you move on. And the huge advantage to this, the biggest advantage to this that I see, there's a lot of advantages to it. Obviously, if you can't beat it, obviously traders can't beat it. All the people trading and day trading and swing trading and option plays and all this other stuff like that, hedge funds and rebalancing and anything else you can think of. None of those beat a simple DCA statistically. But to me, that's not even the most important part of it. The most important part of it is that it eliminates emotions from your investing, because you're not worried about if I'm getting a good price, am I getting a bad price, what's going on in the market today, what's going on next week, what's the macro of this. You're not worried about any of that stuff. All you're worried about is simply, hey, it's my time, I buy and I move on. And I let time and compounding take care of itself. It removes the decision, the emotional decision of should you buy or not, which of course we all know that's the hardest thing to know and the hardest thing to control in investing is your emotions. There's a reason why people buy high and sell low all the time. And that's because stock starts to run, you get the FOMO, you buy in high. And then of course, by the time that FOMO reaches peak and you finally gave in and bought, of course, that's whenever it falls down low. Of course, then all the fear, it's going lower, it's going lower, it's going lower. And of course, it's a self-fulfilling prophecy as it goes lower. So then you end up selling low. And it's kind of a rinse and repeat process with anybody who gets emotional about their stocks. So simple DCA eliminates the emotions altogether. Now, it doesn't mean you don't need to do any work. You still need to be listening to earnings calls, see if there's a fundamental change with the business or something else going on, problems with the business itself. But outside of that, in terms of when to buy, when to do anything else like that, you don't have to figure that out. You just simply buy on your schedule and you move on. So that's the first method right there. Super easy. I think most people out there are very, very familiar with a DCA, and it's a great place to start until you kind of get more nuanced and you start getting a lot more experience and you start really increase your understanding in stocks. Then that is when you can kind of move on to number two. And number two is a modified DCA. Now this one admittedly is more complex. I agree completely there. And don't worry, we'll talk about all of it here in just a second. But this method kept me from buying at $25 when the SOFI was at $25 because I knew that was way overpriced, way overpriced. I had no business buying like that. And then on the flip side, using a modified DCA told me to just pour as much money as I could into the stock whenever it was in the $4 and the $5 range. So yes, it's a DCA, but we modify it to avoid buying at those highs and to really concentrate buys whenever they're kind of at that lower band of the range there. Now, you're not going to get it perfect or anything like that. So anybody saying, oh, Luke's saying he can time the top and the bottom. No, absolutely not. I'm just identifying when stocks are significantly overvalued and then significantly undervalued and kind of adjusting my DCA or modifying my DCA to account for those scenarios. So basically the first thing you have to do is you have to obviously do your due diligence on the company, decide that you want to buy the company. It's a great company, you understand it, you've listened to the past 4 earnings calls, you've done all the work ahead of time. So you know, hey, I want to buy this stock. Great. Now you got to do a valuation and figure out what is fair value for the stock. So that way you kind of have a starting point there. You can kind of set your price target there. Obviously you can have it a little bit higher because, hey, I just want to start buying the stock. I think, long time from now, it's going to be a great stock. Whatever the case is, you kind of set that price target there. And then from there, if it continues to fall down below that price target, I just continue to add heavier and heavier to the stock as it falls further and further below fair value. And remember, if you don't know how to do a valuation and you want to see my buys in real time and see my complete watch list, complete with price targets, make sure you check out the pinned comment down there and see if a membership for my group is right, where we're running a sale right now, March Madness sale. And when it ends, it goes away forever. And you not only get that, you get free coaching, you get access to 5 free courses, you can access me anytime you want, you can be a part of the best 6, 7, and 8-figure Discord out there. So much material in there, guys, and so much more content materials coming every single day. Make sure you check out the pinned comment down there and see if a membership's right for you. And take advantage of the sale before the sale ends. So you're basically just DCAing all the way down until you fill out your entire position there. And then you're into bonus shares at that stage. And of course, if the company's still executing, then hey, great. And you feel strong conviction in the company, you can continue to add those bonus shares and you're getting a significant discount on that because you did a valuation in the first place and you understand what fair value is and how significant the discount is from fair value. So you see, I'm not timing the bottom. I'm not guessing the bottom. I'm not doing anything like that. I am simply DCAing and just going heavier whenever I know it's below fair value. And the further below fair value it goes, the heavier that DCA gets. I hear some of you guys out there basically saying, hey, how do you apply this to a speculative company? I mean, SOFI was speculative a couple of years ago. How do you apply this method to a speculative company? You can kind of see how it works with an Apple or Google or whatever company out there, Nvidia, whatever the case is, you can kind of see how it works with that. How do I apply it to a speculative company? Well, for me, I don't keep speculating into a speculative position unless they earn more of my dollars quarter after quarter after quarter. What that means is, yeah, it may stink, it may feel like a screaming deal, but because they're speculative, and then think about SoFi, a year and a half ago, 2 years ago, they were speculative at that stage. I have no reason to go crazy on a stock like that, like whenever Meta was in the 80s, for example, or Nvidia was in the low 100s, for example. Those were not speculative stocks. Those were great stocks on an incredible discount. So those times right there, absolutely, I just DCA'd straight down into those. Not Nvidia, I didn't buy Nvidia, but I did Meta, straight down into them as they continue to fall deeper and deeper and deeper into that undervalued territory there. But in regards to speculative companies, they have to earn my money quarter after quarter, and I slowly kind of grow that position out. And as SoFi did that 6, 7, 8 quarters in a row, obviously it started gaining more and more of my trust. To me, they moved more and more out of that speculative category, meaning I could really start DCAing down and ballooning those positions larger because what you had was company performance going this way and the stock price going this way at the same exact time. I realize that may look reverse for you guys. I'm sorry. Point being, the company performance in terms of getting the EPS more and more towards the positive and then eventually flipping over to positive and revenue growing and everything else growing while the stock price is going down the exact opposite direction. That is the best scenario you can have as a long-term buy and hold investor is for a company's performance to be growing like gangbusters, but the stock price goes the opposite direction. That's when everybody gets fear. That's when everybody panics and sells. And that is actually the easiest time to buy because you're looking at company performance and understanding it's just one of those weird periodic times where Wall Street gets dumb and you get a great opportunity to add a great stock at an incredible price based upon the performance that they're giving you, not based upon anything else. Everybody else seems to want to buy whenever, the valuation is so overvalued, it's utterly ridiculous and you can't even justify it. That's when everybody wants to buy because that's when all the noise is. That's when all the hype is. That's when all those sort of things are. Now, keep in mind, that doesn't mean if a stock is beaten down at a low price that it's a great deal. I'm not saying that, but there's obviously you see times when the company's performance is going down and the stock price goes down as well. That's a situation I want to avoid. I want to stay far, far away from stocks like that. But when you see a stock that just continues to crush it quarter after quarter after quarter, not hype video from, some random YouTuber out there who likes to hype up everything, not that. I mean, actual performance and the earnings themselves, you see that increasing, the revenue, EPS, free cash flow, all those good things like that increasing while the stock price is going down. That right there is what you want to see. And that's the reason why a modified DCA for me works so much better, because then it makes it easier and easier to DCA heavier and heavier and heavier down. And that is exactly what we are seeing going on with SOFI right now. You are seeing quarter after quarter after quarter for, it's got to be well over 10 quarters now of great, incredible performance, outperformance, and great guidance. And yet the stock continues to get beaten down right now. We saw it after they turned profitable. It had a nice bump up afterwards, and then it's just cratered back down. And that's the exact scenario we have right now. So for me, I have been adding to SOFI like crazy in this time frame. And if Wall Street wants to continue to beat it down to under $6, I mean, who knows? It's Wall Street. Who freaking knows? I'm not trying to figure these guys out. I'm going to happily continue to add more to this position and continue my modified DCA as we go. And remember, if you don't know how to do evaluation and you want to see my buys in real time and see my complete watch list, complete with price targets, make sure you check out the pinned comment down there and see if a membership for my group is right, where we're running a sale right now, March Madness sale. And when it ends, it goes away forever. And you not only get that, you get free coaching, you get access to 5 free courses, you can access me anytime you want, you can be a part of the best 6, 7, and 8-figure Discord out there. So much material in there, guys, and so much more content materials coming every single day. Make sure you check out the pinned comment down there and see if a membership's right for you. And take advantage of the sale before the sale ends. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.